Good morning. First of all, Happy New Year to you. I think we're talking for the first time in 2017. Now, you've been a long India investor, so I wanted your thoughts on whether Indian market has become attractive again after the kind of serious underperformance that we have seen, not just with the developed markets, but even with emerging market space.
Yeah, I mean, clearly last year India had a pretty tough time. Certainly, I think valuations were becoming quite attractive before this latest rally, shall we say. Obviously the whole demonetisation issue has clouded the earnings outlook and GDP growth to some extent. And obviously the commodity complex and energy prices have pushed up other emerging markets. So I think India, because of that little bit of uncertainty, did underperform. But obviously more recently we're seeing some of the large caps beginning to really start moving in this latest short-term rally.
Okay, well, Johnathan, hi, good afternoon from Mumbai. We will be talking about those large caps in a bit, but before that, I wanted to ask you your view on these taxation issues which have started worrying a lot of foreign portfolio investors. There could be an additional tax, perhaps even retrospective tax levied on internal transfers amongst India-dedicated funds. Have you been hearing about that? Would you be worried about something like that being announced in the budget?
Extremely worried. We've spent some time over the sort of holiday period speaking with our advisors within India and elsewhere on this particular matter. The last thing we needed was a bit of uncertainty on that front again from a foreign investor perspective. Seems like layers upon layers of additional reporting burden, triple taxation. It's just unfortunately very unhelpful, shall we say, for foreign investors when considering India that we have another problem like this. So we're quite hopeful that there might be some clarity on this particular issue within the budget, but obviously we're making representations where possible.
Okay, Johnathan, I know it's all about bottom-up stock picking, but from Indian market, what kind of returns will you expect this year, especially if we don't have the unfavorable issues in budget that we referred to?
Yeah, so I think initially our expectation was it would be probably a back-ended type of year where most of the gains would come through towards the second half of the year, due to obviously us, the market, and everybody getting more clarity about the impact of demonetisation and obviously the impact on earnings. So obviously we're getting a bit of a rally now. I still think it's going to be a tough and volatile few months ahead. But I think India, after basically doing nothing in dollar terms for the last couple of years, if the earnings can start coming through towards the latter half of the year, then I think the market could produce good returns. But I think there will be a bit of volatility for the next few months.
Just coming back to that point you were making about how worried you are with respect to this taxation issue, you spoke about making some representations to seek more clarity, but would Ashburton as a fund house be impacted? Because we understand that a lot of the foreign portfolio investors that have a stake in India-dedicated funds would be impacted. But can you throw a little more light on that?
Yeah, certainly from our understanding, and I think this is half the problem, that you can interpret the statement in many different ways, but certainly it would look like we would certainly, our India funds that we run, or any entity that we have over 50% exposure to India, could potentially be quite significantly impacted. I'm still at a loss as to how they would collect or actually monitor this sort of data, which I guess that would be up to the underlying fund managers. But yes, we would certainly be impacted.
Okay, so in case this was to not change and this was to become a law, would that be a significant hit as far as the FI investments are concerned?
Again, I hope common sense prevails as it generally has done in the past.
Yes.
But I think it would, considering the uncertainties anyway around the macro backdrop in India. I know most people, particularly foreign investors from a medium to longer term view, are very bullish on India. but obviously still it provides another layer of uncertainty that we just don't need in this current environment. So yeah, it's not wonderful, shall we say.
But because of this uncertainty, have foreign investors, foreign portfolio investors been reducing their allocation to India? What have you at Ashburton been doing lately, with respect to your overall allocation itself?
Yeah, we've held steady. I think we were getting more, certainly as the market came down later on in the year, valuations in certain individual counters and even some indices were getting back to more realistic levels. We were getting a little bit more positive, but obviously it was difficult, with the outlook that with the uncertainty from demonetisation, the uncertainty to the hit to earnings. It was difficult to sort of to rush straight back in the market, and I think that's probably still the right thing. But certainly we've held steady with our positions within India, and we haven't really traded too much or been too active in the last month or so.
Okay, so Johnathan, let's move on and discuss some more big sectors. We have had a decent start to earnings season. We have a large private sector bank and a mid-sized private sector bank announcing numbers, and for now it looks like there's been not too much of impact of demonetization. Do you get a sense that maybe earnings could surprise in India, especially in some of the large private sector banks?
Yeah, I think I would be very surprised, if I'm honest. I'd like to see some of the big, obviously, commercial private banks coming out to see the numbers there. I still am somewhat amazed, with the impact, and I'm sorry to keep talking about demonetization, but certainly with the queues and the focus on actually cash, taking in cash and obviously giving customers cash back and exchanging cash. Banks, have been so focused on that in the last couple of months that we were worried about a hit to earnings from some of the banks due to that factor, and also obviously a pickup in NPL. So, I think it's too early to sort of be totally confident about the sector. I'd like to see a few more banks reporting before we can sort of be a little bit more confident about overall impact.
Okay, let's talk about the technology space then, Johnathan, because you've been a long-time investor in some of the key technology names, especially names like Infosys, which you still hold in your Ashburton India Equity Opportunities Fund. What have you made of the recent developments with the higher H-1B visa costs, the lower client spending? Would you look to reduce your allocation anytime soon, or are you keeping the faith?
Well, we've actually very recently increased our allocations to some of our existing IT stocks. We feel there is real value in that sector. Obviously, the concerns over the visa issue and underlying business in the US and stuff, and the outlook with the new Trump administration, to our mind, have been in the price for some time. We're not expecting these stocks to run away or suddenly re-rate dramatically once Trump gets in and we get more clarity. But certainly there's real value in there. There's obviously good dividend yields these companies are paying, and we do believe that there will be more pressure on these companies to manage their cash balances more efficiently. So yeah, we have slightly increased our exposures. Basically, just we do see real value. So we're unlikely to be selling any of these stocks down here.
Okay, the other stock that I want to discuss with you is Power Grid, because that's one space which has done quite good of late. In fact, this morning we spoke to the management of Power Grid, and it looks like they'll be giving more orders this year than last year. As a space, do you think this is where you can add some more weight?
Sorry, it was a bad line there. Which was the
Power Grid, the power sector.
Oh, Power Grid, yes, no, absolutely. I think that's been a relatively recent addition into our portfolio. I guess we've only owned it for about 6 to 8 months. But I think you look at the underlying business, you look at the capex plans, you look at some of the projects that are just coming on stream now, and that stock is another one which you could argue is trading at very reasonable valuations for the growth that's now coming through. So we certainly like that particular counter. It has performed very well over the last year or so, but we see no reason that won't continue.
Okay. Well, in your other fund, the Chindia Equity Fund, I had noticed that there was Tata Motors a couple of months ago, but it's not visible right now. Did you cut down your holdings in Tata Motors?
No, I don't know why that's dropped out. We still hold Tata Motors within our funds across our India-based holdings, yes. So we're still very happy with that particular counter. It's obviously rallied a bit strongly. I think globally there's a bit more interest back in the whole auto space again after coming under a bit of pressure, some of the big auto names globally. And Tata Motors, last year had got a bit of a derating over China concerns and other issues, and certainly from a valuation perspective, where it used to trade at a significant premium to other global OEMs, it's now trading back at sort of much more acceptable levels. So we're still big fans of the Tata Motors story and particularly the Jaguar Land Rover story.
All right, Jonathan, thanks a lot for taking time out. Have a good year. That's the view from Ashburton. Still bullish on the market, of course.